We are talking today about the markets and what's going on and why the stock market keeps going up and earnings and data seem to be a little bit negative. And so we're going to do a quick update, and also very important, I want to cover a few things that you should be looking at right now, including refinancing and what's going on with the low interest rates. Also, I want to cover the Roth conversion and the deadlines and things we have by year end. So first, let's talk about this economy. It's a bubble, okay? There's no question it's a bubble. The market is overbought. The stock market is overvalued. In fact, a lot of companies, some companies like Tesla, for example, is extremely overvalued, and dramatically so. If you look at realistic valuations, the stock price should be in the 100 to 250 maybe dollar range, and we're trading up above 600 right now. So that can continue to go up. There's nothing stopping these markets from going up way beyond what fundamentals show, and specific stocks from going up way more than fundamentals show. So there's a saying that don't fight the momentum. There's another saying that says don't fight the Fed. What's causing all of this? There's really a stock mania right now, and a lot of people that are not stock market people, that haven't been investors in the past, have got into this market. There's a new application on the phones called Robinhood that a lot of people are using to buy stock. A lot of people that have never bought stocks before are buying stocks through this, driving the prices up. And what I've found is, looking back over time, it'll always go up way more than you ever thought it would. But the flip side of that is it'll always go down a lot more than you ever thought it would. And so, when do we get out? When do we sell the positions? When do we reduce the risk? Obviously, we're looking at that, and it's very political right now. There's a lot of stimulus that's out there in the market, and we talk about stimulus like this $900 billion that the government's planning on putting forward, and that's obviously a real positive for the stock market, talking about this stimulus. But the other stimulus is a stimulus that isn't part of this $900 billion. It's the stimulus that's created by the Federal Reserve, and this is more additional money printing out of thin air. What they're doing is they're buying fixed income securities and mortgage-backed securities, and they're driving interest rates down. And this creates a huge stimulative effect for the economy, because everyone who has a mortgage right now can go out and refinance and get a lower rate. And if they're reducing their payment by $500 a month, it's the same house, it's the same mortgage balance, and now they have $500 more a month in their pocket. So this is stimulative for the economy. And this can keep up the markets, keep the economy up. For how long? It's very political. At any time, they could cut off some of this stimulus. So it's really a guessing game, and we're watching real closely what's going on in the market. You don't want to fight the Fed, and that's what they say, because the Federal Reserve is putting all this stimulus in to keep these rates low. And it's pretty dramatic. So number one, the first thing you should be doing is refinancing your house if you have an interest rate that is higher than what you can currently get today. It's pretty dramatic. I just ran the numbers on the computer. We closed 5 loans for our clients over the last week, and all 5 were under 3%. This is on a 30-year fix, so 2.9. So when you start looking at a difference between 3.5% and 2.9%, on a $500,000 loan, you're talking about, over the course of 30 years, on a $500,000 loan at 3.5%, it's about $308,000 in interest over the life of the loan. At 2.9%, that number drops to $214,000 if you were to make the same payment. So if you just refinanced your house, kept the same payment, nothing changed, you literally save over $90,000 in interest charges over the life of that loan. It's pretty dramatic. So obviously you need to be refinancing, and I can't stress how important this is. We don't know how long these low rates are going to last, and even if you refinanced, typically there's a 6-month seasoning. So if you refinanced in the past, as long as it's been more than 6 months, you might want to take a look at it again, just to lock in the lowest rate possible. I'm doing it personally for my own house, locking in these 2.9 rates, and so we'll be happy to help you. And we've got a staff here that's, we're just cranking these things out. We're like a machine right now doing these refinances. We're using Quicken Home Loans. That's our preferred lender, and we can go with a lot of different lenders, but they seem to have their act together, and their rates are very good, and the company itself is very organized, and they know what they're doing. They get these things done pretty quick. So And it's a challenge in today's world, in the mortgage world. It's these underwriters and everything is crazy, all the documentation and stuff that they want. So it's good to have a streamlined process, and they provide that. So refinancing, very important. The other thing you need to understand is with these low rates, what it has done is it's boosted artificially home values. And now people can afford a lot more house because the interest rates are a lot lower, the payments are lower, now they can bid up the houses. So the home prices have really taken off. I mean, really dramatically. In the last 6 months, I've seen just a huge increase in appraised values. We're getting appraisals back way higher than people expected. So now may be a really good time also to take a look at selling any properties that you have that are rental properties. If you have a condo or a second home, obviously we can do the 1031 exchange, which is something that Biden wanted to cancel in his tax proposal. I don't know if that's going to happen. I think there's a lot of lobbyists among the realtors that are going to try to prevent that from happening, but it may be a good idea to look at those 1031 exchanges just because it's a great time to do it right now. The gap between the interest or the income that you're getting currently on the rentals and what you could be getting on a 1031 is pretty dramatic. So you definitely want to take a look at that. Another thing to take a look at is in January, we're expecting an increase in the mortgage amounts that are allowed under the Fannie and Freddie and FHA, and so you could possibly qualify for even more, a larger loan amount. And so this is just going to be very stimulative for the markets and the economy. And that's why we've continued to stay aggressive on the investments, and obviously we've had some fantastic returns. And I think that we want to keep our foot on the gas at this point. And I know it makes me a little nervous, and I'm sure a lot of you are nervous with the fact that we are in an overbought market. Prices are very high. The market cap to GDP is off the charts, and these are some of the things we look at to determine whether or not the market is overpriced and we're in a bubble. And there's no question we are. The question is, how big does it get, and when do we get out? And feel free to call me if you want to discuss your own personal situation. We'll be happy to chat with you and make some adjustments based on how you feel. But at this point, with all this stimulus, it's going to provide some continuing support for the market. We will be looking at getting more defensive over time, and that could happen as early as let's say before Christmas, December 21st. That's the day that Tesla goes into the S&P 500, and I think that's going to be a big event. And there's a good chance that after December 21st, we see a significant pullback in the markets because everything is being pushed up in anticipation of Tesla going into the S&P 500. And typically around Christmas time, it's not smart to sell. The market typically does really well around the holidays, and everything seems to do well historically. Doesn't mean that's what's going to happen this year. So we're watching real close, and I am potentially looking at taking some risk off the table just because we are in an overbought position. So a little bit about the markets. Roth conversion, very important. If you are doing a Roth conversion, I believe we have, over the last month, have done tons of conversions for people. Those are all completed. We have several appointments scheduled for the next week to do conversions. And if you have not converted, or you're not scheduled, and you think you might want to do a Roth conversion, call us, because I think we've gone through just about all the ones on our list and reached out to everyone to do the conversions. So that really needs to be in by December 23rd. We have to have enough time to process the paperwork to get that all converted over. So very important. We got to get that done, and reach out to your tax person and figure out whether you should be doing the conversion. Now, obviously, with the potential for higher taxes that are proposed under the Biden tax plan, doing those conversions could be pretty beneficial, especially this year. And we're watching real carefully. Now, I don't anticipate any major change for 2021, even if Biden gets a lot of his tax proposals through, which is a little bit more unlikely if the Republicans retain control of the Senate. I don't expect it to be retroactive. I think they'll push it to the next year, especially things like increases in capital gains or elimination of the step up in basis, which is a big deal. That brings up another subject, this Prop 19 thing here in California. Big deal. Kids inheriting property are going to have higher property taxes now. The Prop 13 was changed with this proposition that went in here in California. So another reason why you might consider the 1031 exchange, might be a good idea to do it. Also take a look at your estate planning and see how this might impact you if you own real estate, rental properties, second homes here in California. That could have an impact. So those are kind of all the things I wanted to cover. I hope that gives everyone a little update on what's going on and what we're seeing out there in the market. I want to wish you a happy holidays, and as you can probably guess, we're not going to be doing any big holiday party like we normally do because of the COVID rules. We can't have that many people in a room. So what we'll probably do is have some kind of a online thing where we'll record some of the financial analysts and some of the people that are predicting what's going to happen with the market. We'll get them on video specifically for us and our team, and we'll get that out to you so you can take a look at what some of these people are thinking about the markets. And I'll also tell you, I'll kind of get into a little bit more detail on the data and what we're looking at and some of the things we're watching. Obviously, I mentioned this to a lot of other people. The event in January in Davos, Switzerland at the World Economic Forum. There's a lot of talk, on Wall Street and out there in the financial world that this is going to be a big event. And one of the things they're pushing for is digital currency, get rid of paper money and coins, and this could have a significant impact on the currency markets. So we definitely want to keep our eyes on that, and I'm watching and hoping to get out in front of any changes before they happen on the investments. So hope everyone is doing well, and wish you a happy holiday again, and feel free to reach out if you need anything between now and the end of the year.